Welcome back. This is Luis Mendez. I'm your real estate agent. And today I'm going to be going over how to buy a foreclosure home. I know you're probably seeing on the news how there's a lot of foreclosure homes now hitting the market, and it's slowly on the rise, which is pretty sad for a lot of families. But for the other folks who are interested in, possibly buying a foreclosure home, I want to kind of go over the beginner friendly guide into this. Today I'm going to cover what is a foreclosure, how to buy one, cash or financing, the type of loans that works, how long the process could take, the benefits and risk, which it's something you really need to know. Who foreclose, who foreclosure homes are right for. A lot of people think it's right for everyone, and I don't think so. And also the biggest misconceptions about foreclosure homes and the truth about what to expect. So, first off, what is a foreclosure home? A lot of people I've heard some wild things about what a foreclosure home, but to put into perspective, a foreclosure home is a property that the bank has taken back because the previous owners, unfortunately, couldn't keep up with the mortgage payments. And this doesn't happen just, you miss one payment. This happens for about a year or two, where it starts off. Once they start missing payments, they could go into foreclosure or pre-foreclosure. They give them notice, they give them, there's lots of options to prevent them to go to this situation, but sometimes those previous owners, don't they don't know of the options that they have, or unfortunately they just stop paying altogether. Some of these are people who passed away and there's no relatives to take over the property. You don't know the situation before, but now the bank owns the property. So once the bank finally owns the property, they're usually trying to sell it for quick to recover as much money of their, as much as their money as possible. You can find these houses on the MLS, some on auction sites, but we have a list of where you can get all these from. Now, remember, the good thing about them is you're not buying from the homeowner, you're buying from the bank or the lender. So that changes the personality to the type of offer you try to do. So how do you buy a foreclosure? That's number two. Well, most common is with cash, because cash is king. But the reason why is because it's a faster deal, less paperwork, and you don't have to worry about so much of the property being in the right formality position of the home. So that way it could get loan approval, waiting for an appraisal and all that stuff. But you can get it through financing. It's very common with conventional loans or FHA loans, and I've actually had one buyer do it with a USDA loan. But the thing about foreclosure homes you have to know is sometimes the previous people who are there, knowing that they're going to get kicked out of their home, they're not going to get most of their money. They're not going to get any money back, almost. And they're going to be sometimes trash the place. So break down walls. They'll take all the light fixtures, the window treatments. They'll take the toilets. They'll take a lot of the stuff with the property with them. And so when you walk into a house that's a foreclosure home, some may have is just bare walls. I had one that was, I think it was the sweetest deal, where it was priced $60,000 under appraisal, and they had a new roof, new AC, new water heater, and a new pool pump. So they have, the house had a pool. It was on like a third of an acre. Great property for 60,000 less, and he bought that with a USDA loan. But here's the thing with that property, he had to, when we did the inspections, there was a few issues with the appraisal, And it was minor things. It was just they had to cover a lot of the exposed electrical, and the buyer actually paid for that to get all the electrical things covered in hopes, because it was going from the bank, and the bank said we're not fixing nothing. And that's the thing to consider. So you can get it finance, but just know that it has to meet, it has to meet those basic guidelines. Sometimes, they just, the house is decent, and to go through. That's why more than likely a conventional loan works for that. Or you could do the FHA 203K, which is it's a repair loan, a home repair loan type of thing. The next thing is, how long can this process take? Well, for foreclosures, they're a little bit on the slower side. So cash deals a little bit faster, 2 to 4 weeks, more towards the 3 to 4 weeks. If it's financing, you're looking at about 4 weeks on average, but it can take up to 8 weeks or more, just depending on the situation of the home. So yes, it can be a regular deal, but depending on the bank, sometimes they're very slow, and it could take a lot longer for that. Now, what issues can foreclosure homes have? And this is kind of like what I talked about with, it being an issue with getting it finances. Some of these are deferred maintenance. Sadly, they bought a home, maybe they lost their job, or um, some people buy the home without thinking about taxes going up, insurance going up. The daily cost of owning a home. I don't recommend buying a house at your peak, but deferred maintenance. So the AC's probably never been maintenance. Just the house is more than likely going to be in bad condition. If it's vacant, more than likely damage from that. Damage from things not being used, things getting corroded. If there's any roof leaks, think of mold spreading. The AC's not on, so things could spread. The humidity could cause things to spread faster. It can have electrical and plumbing issues, and that could be an issue if it's an older house and they just couldn't update the electrical, and they lost insurance from the house, and they don't have the funds to put in the plumbing or the electric, and updating the plumbing and the electric, and that could be an issue, and you're stuck with having to pay, I mean, at least $10,000 to rewire a house or fix all the plumbing. So think about that. Missing appliances, HVAC units completely taken from the property, like I mentioned before. Also, toilets, toilets, and cast iron tubs. They will rip these things out. I would say it's about a 30% chance a lot of these things are gone, especially the appliances. There'll be no appliances. Vandalism, some people are very upset that they're losing their house, and that's their way of dealing with grief. They will tear down the house, they'll spray paint it, they will, punch holes into the walls. Excuse me, my throat's very dry. Um, Overgrown landscaping. I mean, if the property's been abandoned, more than likely the bank's not going to take care of the property unless the city like kind of demands it, city or county demands it. So you would see 4 feet tall grass pool, like maybe the pool is covered but is like green, and all the plumbing is clogged up. And I've seen a lot of those, and they stink, and they're full of bugs and frogs and all that stuff. And there could be unpaid liens, which unpaid liens, you're going to mostly deal with that with auctions. You won't get that with the foreclosure homes, but with auctions, when you're buying a house, make sure you do your own title work, because you're getting the house and every lien included with that. So if it's, let's say the house is $250 and they have $100,000 lien, well, that's a $350,000 house. Think of it like that. So if you don't do your own research when you're purchasing an auction house, you could be, you'll be out of it. But also if there's no liens on it, then perfect. But think of the liens when you're considering a foreclosure home or any auction house. And then, you know, the benefits of buying a foreclosure home. Well, more than likely, they're going to be lower purchase price. That's on, I would say it's more like a 70% chance it will be a little bit lower than the purchase price, or what the average market of the homes will be. Like I said, you're buying from a bank, not a homeowner. So you could kind of go in and say, hey, what's the bottom line? You could kind of negotiate a little bit stronger. They're a little bit easier to negotiate with than a homeowner, where homeowner, there's a lot of emotion to what they're selling. The opportunity to build instant equity. Like I had the client we bought a foreclosure in in Claremont, and he had $60,000 instant equity in his house, and he was super excited for that. And he bought it at 240, and he recently sold it at a little over 400, about $410,000 within 5 years. I mean, it was pretty great job. It's a great investment potential. If you're looking to get some investment properties, you're buying it cheap. If you're looking to flip, I always tell people focus on the 4 points and put some lipstick on it and then flip it, depending in the market. But if you're looking for rentals, hey, that's a great option too. There's a lot of foreclosures in, I would say, lower income places. So if you're trying to meet the 1% ratio, that could work out really great for you. And like I mentioned before, when I said that you're purchasing from the bank, it's a less emotional negotiating thing. So you could come in at a sharp, at a lower rate. You're not going to get cursed out at or ignored. They'll come out and say, no, those numbers don't meet, those numbers don't match, or they'll say, yeah, we could work something out with that. So you kind of get that for you. So if you are looking to flip, invest in properties, or if you're a handy person, these are great for you. Now, the downside of buying a foreclosure home, the homes are being sold as is. More than likely, the banks are not going to do anything for it. Some banks may fix the roof or at least fix the 4 points so that way the home could sell. But most times they're not doing nothing, and they will sit on the market for hundreds of days, before they take a big loss. Repairs can be expensive. If you need a roof, plumbing, and electric, you're talking, not just a few $100. We're talking thousands of dollars. Roofs, you're looking at 15,000 plus. Plumbing, 5,000 plus. Electric, you're looking at about $8,000 to $10,000, just like kind of on a basic home. So think about those things. It is a little bit harder to finance if the home is in a rough condition. It is a slower process real estate deal compared to most homes. You don't know the history of the home. You don't know what they've done in the house. You don't know much. One good way to kind of find out about the property, if they're close to a lot of neighbors, maybe ask around, or if that really matters to you, you could ask neighbors or call the police department, kind of see if they have any information on that local property. And then the downside is competition from cash investors. If you're in a good spot and you're trying to buy the house with an FHA loan or a conventional loan, the cash buyer is going to be king, all the time. It's because they don't have to worry about appraisal. They don't have to worry about it the inspector finding an issue that can't be fixed. More than likely, like I said, the bank's trying to sell fast, and they'll go with the cash buyer. Now, who should buy the foreclosure homes? The people this works out for is going to be for investors, flippers, buyers who are good with repairs, handyman, homeowners, the contractors and stuff, people who want to bargain and are ready for the work. This is the mindset. If you're going to buy a house and this is not your first house and you're ready to put in some work into a home, this is good for you. Or if you're a cash buyer, this is going to be perfect for you because we can get something in that perfect price point. Now, who I don't think should buy this home? If you're a first-time home buyer, a foreclosure house should not be for you, because you're buying a big investment, and you don't want your first house to be a big headache for you, especially if you don't know what you're doing. I mean, if your parents did this, and you have, or if your line of work, you're into a bunch of this construction stuff, that's another thing. But if you don't know anything about home repairs, you don't know anything about that type of thing, and your money is a little bit tight, you want a safe and secure place, don't get a foreclosure home. Buyers, if you have no money for unexpected repairs, like you don't know if they clogged the plumbing and is like all the way down, like towards the sewer, and the first few weeks everything is great, but you have no idea it's destroyed. You don't know what the people have done. If you don't have unexpected, if you don't have money for the unexpected repairs, go with a safe house that's that has maybe a newer house that has warranty, not a home that is a foreclosure home that's more than likely going to have issues. People with a tight time frame. So this will be, folks, if you're selling a house and you have to move into the house the same exact day, I wouldn't do that. If anything, have somewhere to stay in between and then move into this house. But if you have to close and move in the same day, a foreclosure home may not be the best option for you, unless you have somewhere to stay in the middle to ease the stress, because it will drive you insane. Anyone who needs the home to be perfect on the first day, get a new construction, get something newer, because they may have issues with the home. Every house is going to have, there's no perfect house. The only thing is perfect is God. But since we're humans, we make mistakes. So there won't be a perfect home, but they have warranties. And if you find everything in the inspection, you hand it off to them and they will have to fix everything. So that's a good thing about buying a new construction. And then also buyers who are stressed and it has that uncertainty. Foreclosures are not for you. That is, talk about stress for, if you're a first time home buyer, this is going to be stressful, because you don't know the conditions of the home. You're going to spend about $500-600, maybe more, maybe up to $1,000 in the inspection, trying to find out what the home has, and then you find out it's your worst nightmare. You need a new roof, you need plumbing, it has some mold, it has termites or something like that, and you're gonna be discouraged. So if you're a type of person that gets stressed out and you just want less stress, easy thing, don't go for a foreclosure home. You got to have a good mind. You have to have the right mindset for it. Now, what are some misconceptions about buying a foreclosure home? So I've heard people say, well, all foreclosure homes are cheap. That's not true. Some are discounted. Some are right at the market value. Some are priced just below. But you can always negotiate for a lower deal. And then the second misconception is foreclosure means a guaranteed deal. No. We more than likely we can get a better deal, but it doesn't mean you're always going to get the deal, because the price has to fit the bank as well. They have to come to agree with it. The repairs have to be reasonable for you. If you go into the house, it looks like a new roof. You go in and all the repairs and everything, there's no permits for the roof. It's just so much financially for you, like a mistake. The house may not be a great idea for you. Or if the numbers don't make sense, it's not for you. Number 3, the bank will fix the home before closing. That is extremely, extremely rare. And I think the house that we got, where the bank fixed the roof and the plumbing, the water heater and the AC, they did that because they wanted the house to sell, and that's when the interest rates were tanking, so they were able to fix the house. So that the interest rates were actually going up at this time, and sales were stopping. So they were trying to get the property so they could sell, and so they ended up doing that. But that was the only foreclosure home I've ever seen where the bank was willing to fix anything. Number 4 of the misconception, I've heard that you can't get financing. That is not true. You can. I mean, we closed with a USDA loan, which I didn't think you could do with a USDA loan, but they ended up doing a USDA. We first did conventional. I've done conventional. I haven't done FHA on these, but I've done FHA. I've done conventional and USDA on these. And number 5, foreclosure homes are risky and should be avoided. Yes, they are risky, but if you have the right mindset, if you know what you're getting into, and if you're if you're a cash buyer, you have that mindset, you know what you're getting, this could be a great opportunity for you. And so the honest truth, a foreclosure can be a great opportunity, a great deal, and a huge win if you understand what you're walking into. But it requires patience, a good real estate agent, me, proper inspections, and you need to find a home inspector that knows what they're doing. And that could be another video. Maybe in a willingness to get your hands dirty on the, go into the property and see the home. I've known investors, when they see a property that has oversized, the yard is oversized, windows boarded up, they start drooling because they know that's good money right there. So if that's you, this is great. This is a great opportunity for you. If you're interested in knowing more, let me know. If you found this breakdown helpful, make sure to like this video, subscribe, and comment below with your questions. And I'd love to help you out. Thank you so much.